Welcome back to Market on Close. It's time for Options Corner. Of course, that means we've got Kevin Green joining us right now to take a look at the day. Now, Kevin, we had the NASDAQ hit an all-time high, S&P getting very close. I actually haven't checked in a minute. I don't think we got there. What are you keeping an eye on today?
Well, Marley, we actually did get pretty close to the closing high. We hit the 61.44.66 level. Actually, I do believe that was above that closing high, but we'll see what actually happens here during the close here. But we do see, obviously, market breadth expanding. You are seeing a fair amount of participation when you're looking at the sectors here, which is exactly what you want to see on a day like today, especially for the S&P 500. I'm looking at 61.40. It's going to be a couple of levels: 61.40, 61.45, 61.50. Obviously, those are in those 5-point increments. And that's because you actually have all three of those strikes for the SPX options expiring today above the 100,000 level when it comes to volume, which is a lot of contracts being traded on today's session. So you might see a lot of resistance at these levels. And if you're looking at the estimated kind of gamma exposure per 1% point to the upside for the S&P 500, it's around $150 billion. So that just means that there's going to be a lot of resistance here at these levels. If we're able to break through them, maybe we do see a squeeze. But right now, we're trying our best to try to get through them. Let's see if that's actually going to happen. Any type of fundamental breakdown, you want to be able to hold that 61.20 level for the S&P 500, and 61.30 kind of gets you in that median balance area here when it comes to these two particular levels. But overall, we're actually looking pretty decent across the board when you're looking at these markets. It's just going to be very difficult for us to try to break through and potentially maintain these current levels outside of maybe some aggressive buyers trying to step in and maybe have an aggressive buy order imbalance when it comes to the market on close number, which comes out 10 minutes before the close.
Okay. And I was talking to Kevin Hanks earlier about volatility. It looks like we're getting very close to that 16 number, trending lower here. Do you think that trend's going to continue? What stands out for you in terms of volatility?
Yeah, it's that is actually a really good question. Could volatility crush even lower than where we are at right now? If you're looking at the VIX, you can make the case, yes, we have seen it below these current levels before, and it probably won't be able to maintain at those levels for too long. What we have right now is the VVIX. So this is vol of vol. We're looking at the volatility of these VIX options, if you will. What's interesting is on the right-hand side, today's candle actually turned into a green candle, meaning that we are seeing maybe vol of vol starting to pick up or potentially stalling out at these current levels. And the reason why I kind of bring that up, if you have the VIX, which measures volatility on the S&P 500 options, continuing to move lower, but you have a kind of a stagnating vol of vol number here, you're starting to get, you can kind of look at an interesting dynamic where you may start seeing hedges really kind of picking up here before the VIX actually reflects that. And that could be a near-term catalyst, if you will, or an indication that a pullback can happen. Let me just try to explain this a little bit better. If we look at the next chart, which is going to be the VVIX versus the VIX, which is going to be a price ratio in orange, and the S&P 500, which we're going to have in blue. Usually when we have these re-ratings to the upside for the VVIX versus the VIX, which is going to be that comp chart, that next chart that we have in the grid here, once we start seeing that kind of inch up a bit and start to aggressively kind of move to the upside here, just meaning that the vol of vol is actually increasing a bit, that usually is towards maybe a potential pullback. Now, we don't know the extent of that pullback. It doesn't mean that it has to be a 10%, 15, 20% correction or anything of that nature. It could be a 1%, it could be a 2% pullback in the market. But we are starting to see that ratchet up just a tad bit. You can see that positive correlation that we have between these two ratios and the S&P 500. But once that ratio or that correlation starts to break a bit, which we're kind of doing over the last couple of trading sessions, I'm not saying that we are near the end, but we might be closer to the end, or we're very bulled up, let's say, when it comes to the options market and pricing involved.
All right, so you'll be keeping an eye on that chart. Now, I know you have another ratio chart. I saw you have an equity put call chart. Looks like we're trading pretty close in line with how we've been this week, but what's it looking like specifically today?
Yeah, so once again, if we're looking at the put call ratio on the equity front, we're actually at pretty low levels. We're sitting at around a 57 right now put call ratio. That just means that more calls are being transacted than puts. That doesn't mean they have to be calls that are being bought. They could be sold calls. things of that nature here. But if we kind of align the tracks where we have VVIX, vol kind of potentially stalling out, ramping back up, you have this put-call ratio at extreme low levels, which does indicate bullishness in the market. Usually it doesn't stay at these low levels for that long. It doesn't mean that tomorrow it's got to re-rate higher, but over the next week or so, I would expect that we would see maybe that put-call ratio leveling out a little bit more back to its equilibrium. And that, once again, could result in either a stalling or a compressed type of market or a pullback in this market. I think overall, if you're kind of looking at the structure, it's looking really good, but we are at an extreme bullish phase right now in the S&P 500, and when you're just looking at the market as a whole, and that's obviously exemplified by us being at all-time highs and hopefully inching to and closing at all-time highs today if we get lucky.
We're inching closer as we speak, Kevin, and we'll be able to talk about it after the closing bell. I'll have you back on for the closers panel, so we'll see you in a few minutes.